struggle with seeing things up close these days, so I've got my glasses here in case I have to look at anything. Thanks, Greg, for the introduction. And certainly over the last number of years, we've been working with the Employers Council on a number of research projects that we've highlighted and that you have in your kits in front of you. I think way back to in fact, prior to even, I think, before the oil prices had taken off as much as they had, we started working on a productivity piece looking at how wages in the province had been coming up and how the province was going to be challenged in terms of its productivity versus wage picture going forward. And I remember before the collapse in oil prices, we were already talking about how revenue growth in this province had taken off so quickly that it put the province in a real how should I say, in a real situation with respect to dependence on oil royalties. So some of these stories, some of these concerns that we had even prior to the collapse in oil prices have kind of come to bite us a little bit as oil prices did drop, and the province has since been struggling with the fiscal situation. So I have, I think, a little bit of good news in the sense that we do feel that the province going forward has a fairly solid projection for its income side, for its GDP side, if you like. GDP is just income. And that situation, and certainly when we look at oil royalties, they have recovered slightly from the collapse back in 2014, 2015. So there is, I think, a little bit of hope and a little bit of light if the province can put together a credible plan and a plan that it enacts to really cut a little bit on its on the real side of the problem, which is the expenditure side of the problem, as we've just heard. Not the revenue side. The problem isn't a revenue problem. It is, in fact, and I would agree with the Premier's quote, it is an expenditure problem. So when we think about the fiscal outlook, balancing resource wealth with aging demography, I know this is something you've all heard before, but I'm going to highlight a few things around that. In fact, we're going to talk a little bit about four themes here. The province's long-term economic prospects, I think, as I just mentioned, are fairly good. They are going to be buoyed by oil production and hopefully, perhaps not right away, but hopefully down the road, slightly better oil prices. But the fiscal situation, again, remains really difficult because of this gap in revenues that we're currently living. And the problem really is one of turning that around so that the province can benefit from essentially a fiscal dividend and solid revenue growth going forward. The credible plan to balance. You know, we at the conference board do a fiscal outlook for all of the provinces. And you know, when we look at the plan for the province, we have the top line plan going forward on the expenditure side. We have the top line on the revenue side. We have really no details when we look at the provincial fiscal budgets or economic updates. We really don't have any details, and we haven't had for a number of years, around how that plan is to be achieved. So I think a credible plan is one that delivers on where are the efficiency gains going to happen on the expenditure side to match essentially what's currently in the budgets or the economic outlooks. And finally, we'll touch on the point that, yes, getting to surplus, and we've seen this happen in some other provinces, I should say. I don't know that provinces as a whole across this country have been terribly good at managing their fiscal situation, but we have seen some examples where when the provinces address the problems, or at the federal level, when we address the problem, we can turn what is essentially a vicious cycle of debt and higher debt servicing loads. We can turn that problem into one that is beneficial, a virtuous cycle, if we can get to a point where the province is reducing its debt, or at least reducing its interest payments on that debt. That is a huge challenge for the province of Newfoundland and Labrador at this point, and I think going forward, it is going to remain a problem certainly for the next couple of years. So Four things we're going to look at. The first one, economic outlook. Certainly resources are a boon to the province. Resources have brought lots of income, lots of GDP, lots of wealth, and that wealth has been shared not just by business and the owners of capital, the owners of these projects, but also by the people of the province. If you look at the increase in household income, in wages in this province, it's been phenomenal. It's been outpacing all other provinces in Canada since the boom years. So that prosperity that the oil patch has brought to the province has been solid for both business and households in the province. Now, the issue, of course, is that anything to do with resources, it can be volatile and is volatile, and there are big swings up and down. So we do feel that the offshore oil industry will play a key role and continue to play a key role in driving the provincial economy. We are hopeful that we'll see further investments and that will drive production. And again, I'll talk about prices in a moment. The big challenge for the province, of course, is it can do, and it is going to do well, we feel, in terms of its total income, in terms of its total GDP, despite the fact that you are really constrained in terms of the demographics, in terms of some of the other issues, productivity and investment in other areas. So that's a challenge. It's also a challenge in the sense that we are seeing, based on the plan, a situation where government spending is going to be restrained, very restrained, in fact, according to the budget documents over the next few years. So that is also taking away from the province's growth, the ability to grow. So there's our outlook. This may look slightly complicated, but it's essentially GDP or production on the left scale in the bars and in blue. So what we're seeing there is the volume of essentially mineral fuels production or oil production for the province. We are seeing Hebron ramp up. We do expect at least one other project to come into development over the next few years, and that should add to growth, as you can see further down. So this is a 10-year outlook for the province in terms of its GDP. The other piece is the price. And this is Brent price of oil. You know, I do think that very near term, for this year, for example, last year was a bad year for the global economy, and we saw essentially the demand for oil take a, I mean, it was still growing, but it wasn't growing as much as expected, and prices took a bit of a hit. We are seeing a current situation, in fact, in just the last day or two, where the risk of this coronavirus having a big impact on the global economy is very much there. Certainly, we're already seeing an impact from less travel, less air travel by the Chinese. That's already had an impact on prices. So I do think that when we look at the oil price outlook for this year and for next year, perhaps, we may see some downside risk in comparison to what's in the budget. But longer term, that should recover, and we should see oil prices at least stabilizing and perhaps getting, as you can see there, above the $70 mark. This is for Brent. So what that means is pretty good GDP growth for the province, despite the fact, I mean, if you were to look just at the demographics, at the productivity picture, at the fact that there's fiscal restraint, you would say Newfoundland and Labrador are going to feel the pinch, and it's not going to be a strong growth environment for the province. But, when you look at the production side on the oil patch, that is going to help elevate the province to one that is in line, I would say, with the national average or even slightly above many of the other provinces. And so here you have not just real GDP growth, which is running at around 1.5% for the next 10 years in terms of our forecast. That's just around where we think the national average will be. But nominal GDP growth, this is, add to that the price effects, and the reason I present that is because that is essentially what you're growing your pie that government can tax, right? So this is the revenue side of the picture, which is growing, or we feel is going to be growing close, or somewhere between 3 and 3.5% range. So that means if your government revenue side, your taxes, et cetera, will be growing more or less at that pace over the forecast period. Again, with that caveat of weaker prices on oil in the next couple of years. So the oil royalty, I think, are at risk for fiscal 2021. Another challenge is the demographics, of course, and this plays a role in two parts. One, of course, is that it takes away from the province's ability to grow its economy. If you have the amount of labor, the number of people available for work declining, this is definitely an issue in terms of growing your economy. But the other side of the picture, the dual-edged sword of this is, of course, that you have an aging demography that is going to be more and more costly in terms of your healthcare system. And I know you folks are all very aware of this, but the idea that 70 is the new 50, the point is that people really aren't staying on the labor force. I mean, the average retirement rate has edged up. It's about 65 years of age now nationally. It has edged up a little bit, but sooner or later, everyone retires. So this is essentially just delaying the problem slightly. And so, no, 70 is not the new 50. People will be exiting the workforce in droves, and this is going to have all sorts of implications. Here's the population pyramid, and the reason I wanted to show you this, again, I know you're all familiar with this, but today's population is in the blue bars in Newfoundland and Labrador. You can see the darker blue bars, that's the baby boom cohort, and you can see that the baby boom cohort, in fact, the early boomers, which are the older boomers there, they have retired for the most part. The early boomers have retired, but they're a small cohort in comparison to the back-end boomers or the late boomers, those that are today at their peak, kind of in their 55 to 60 range. So those folks are going to be retiring in droves over the next few years. And that's where you see that essentially projection heading forward, or just over the next 10 years, you see the yellow bar where we'll be in 10 years. The reason I wanted to show you this is that this demographic profile, this pyramid, if you'd like, is very, very different than the rest of Canada in the sense that there is no echo boom. When you look at the demographic situation for Canada and you look at the blue bars, there's an echo boom in behind. The millennials are a big bubble in the national picture in behind. So there's a bit of a lull, but then there's this other boom which has entered essentially the workforce. So what's different about Newfoundland and Labrador? And the big difference is that young people are leaving, and that immigration levels have been very low in the past. So it's an issue of retention. It's an issue of lower immigration levels in the past in the rest of Canada, and certainly an issue of retention of immigration going forward. We have, in the forecast, we have higher immigration levels, international immigration levels, but we also have pretty high interprovincial out-migration levels. So we have essentially very weak growth in the province going forward. And you may say, well, we're doing things to change that. We'll probably have better retention going forward. We may have higher population growth than you have in your forecast. But I can tell you that we've been doing this for 20 years, and we've been getting it pretty right over the last 20 years at forecasting these kinds of out-migration flows from the province. So essentially, we have an overall population that over the next 10 years is declining by almost 1% a year. It's in fact 0.9 percentage points a year, and it's not that different, in fact, from what you're living today, which is a decline of about 0.8% in the last year. It's funny, I was reading the paper, the Telegram yesterday, and there was a story of a couple that's not planning on having kids because they worry about essentially the fiscal burden on their children, if you can imagine. So people are influenced and affected by, in terms of their demographics, by I think the prospects. And certainly when you look at the birth rates There's a difference between the fertility rate and the birth rate. The fertility rate is the number of children that a woman would have over her lifetime, and the fertility rate is the lowest in the country in Newfoundland and Labrador. So women are choosing to have fewer kids here over their lifetimes than in other parts of the country. And on top of that, the demographics, as you just saw, aren't very favorable to high birth rates. So the natural rate of increase is something that's really tough to move. Let me just go back here. So that piece, again, despite all of the problems that you have in terms of the demographics and the challenges of that in terms of driving economic growth, the picture remains not too bad overall because of the resource wealth that you have in this province. And I do think that oil revenues will continue to drive a lot of the prosperity here in this province. The other issue then is, if we turn this now on the fiscal, how does that look going forward given the situation that we are in right now? So two big issues on the fiscal. One is that near-term revenue volatility, and the second is the challenge around the aging demography on healthcare and other costs. Now, I know you've seen this chart before, so this is up to date now with the numbers from the last economic update all the way to 2019-2020, which is, I guess, close to being complete. And what you can see here is that expenditure line, which is the red line, that's total expenditures. And then if you sum the two blue lines, or the two blue shaded areas, you get the total revenues. And this is where we were in 2013, 2014, where you see that the oil royalties really jumped, really took off, with oil prices doing really quite well over that period. But what was amazing was how quickly expenditures jumped to catch up. And essentially, it left the province very, very vulnerable to a drop in oil prices, a drop in royalty revenues, which is exactly what happened in 2014. Late 2014, and you see that in the fiscal year 2015, 2016. So a huge deficit opened up, a huge gap between those opened up in that year, and the province has continued to grapple with this problem going forward, and this problem is essentially adding to the debt load, adding to the debt servicing costs, and we haven't really had a plan in place that's been achieved in the sense of reducing those expenditures. As you can see, they've stayed relatively high. Now, this does exclude the Atlantic Accord, by the way, these numbers, the big jump in revenues that are associated with the Atlantic Accord in 2019-20. There they are. So that is a one-time hit. It's essentially measured, taken in, this is over $2.5 billion. It's actually about $2.4 billion in the fiscal numbers here. And it adds to the revenues in 2019-2020. And it's, I guess, I'm not an accountant, but I guess the accountants have vetted this. And the idea is here that this is actually going to reduce the debt burden. So you put it in on the revenue side. But it's a one-time effect. It comes out the following year, and your revenues essentially drop back down to essentially the levels that you see here, 2020, 2021, according, again, to what's in the latest economic update or budget. There's the expenditure piece, and again, we have from the documents from the provincial finance department, we have the budget documents which tell us that expenditures are going to be coming down, and these have been typically back-end loaded. So when we saw the first attempt to address this, we saw typically spending staying fairly stable over the next few years, and then in the outer years we tend to see the bigger cuts. Well, we're there now. What you're seeing here is in 2019-2020. This is the updated data. Expenditures were slightly higher than expected in the budget. And then going forward, we have about a 2% decline in 2020, 2021. 2% decline in nominal terms, right? If you're looking at inflationary pressures, it's a 4% decline in real terms. Another 2% decline the following year, and then, if I'm not mistaken, about a 3.5% decline in 2022, 2023. So that's the plan. No details around where those cuts are coming. And if we stick to that plan, with those very steep expenditure restraints or cuts, this is the kind of outlook that we'd have for the budgetary balance, again, excluding the Atlantic Accord of almost $2.4 billion in 2019-2020. So essentially, the deficit is getting worse in 2019-20 than it was last fiscal year in 2018-19. And it's probably not going to be any better in 2020-2021, despite the fact that we have those expenditure cuts in the numbers here. So a tough situation here. And again, I would go back to the forecast for royalties. Royalty revenues were actually in the economic update were actually pushed down by, I think, about 160 million. I get the sense that we're going to have to push those forecasts down for 2020, 2021, and at least in the next fiscal, because of what's happening at the global stage and because of what's happening with oil prices recently. So you're probably going to see a deficit inching up towards the 1 billion mark rather than the 800 or 900 million that we have here. Now, is this sustainable? Well, this is the debt load that the province is taking on, and you can see here again on the left scale. You can see how the debt has risen as a share. And just in terms of the billions, and then as a share of GDP, as a share of your income on the right-hand side scale. So we've hit essentially, almost 50%. In 2018, 2019. Again, 2019, 2020, the reason we're not hitting 50% is because of that Atlantic Accord payment, 2.4 billion or 2.5 billion, which takes down essentially in accounting terms that debt load in that year. But right back up, we start growing again in 2021, 2020, 2021, and in the later years, despite, again, the fact that we have the plan in place with the deficit being reduced over time. So the burden of a big debt, of course, is in debt servicing. And as you start, essentially what you have here is 12 cents of every revenue dollar in the forecast, over the forecast horizon. Right now it's closer to 13.3 cents of every dollar is going towards debt servicing. And this is the vicious cycle piece of this, that if you don't address the issue of a deficit, if you don't address the issue of debt, then you have more and more of your revenues crowding out, to service that debt, crowding out your ability to pay or spend on other programs. So if you do, or if you are able to turn this around, you can get yourself into a virtuous cycle where debt servicing as a share of revenues can drop if we manage that gap that we currently have. So a little comparison here across provinces, federal and provincial government balances. You see the federal level, in fact, in 2018-19, it's not too bad, but the federal government is talking about deficits in the range of 20 billion. Prior to the election, we talked about going to 27 billion in terms of the deficit. That's running at essentially 1 to 1.5% of GDP. So that's a problem in itself. Newfoundland is already there in 2018, 2019, despite the fact that the deficit's smaller in that year. So as we get to an $800 or $900 billion deficit, we're quickly going to go to 2.5% of GDP or even higher if again, that oil royalty doesn't pan out as we expect. The net debt as a share of GDP, unfortunately, Newfoundland is right up there in terms of top of the list. And again, we had a situation, for example, in Quebec, where their net debt as a share of GDP was at the highest level in the country. They were able to address their debt with higher taxes and very restrained spending over a number of years. They've turned that around. They've been running surpluses, and they've quickly seen their debt, which was much higher than Ontario's or Newfoundland and Labrador's, drop as a share of GDP, and they're now able to benefit from that fiscal dividend. So we are seeing tax cuts and other benefits. It was turned around in a fairly short period of time. I would say in about a 6-year period. The province was from 2014 on, essentially, the province was able to do that. So there is hope. It's going to be a tough situation for the province of Newfoundland and Labrador, but we need to get this net debt as a share of GDP down. We need to get the burden of the cost of this debt down. There's the debt servicing cost, again, as a share of revenues, almost in fact, at 13.3% of revenues, so 13 cents, much higher than any of the other provinces in the country. And of course, the other piece that we didn't talk about is, as your debt gets higher, your cost of financing that debt also can get higher. And we've seen the bond rating agencies rate lower Newfoundland's ability over the last number of years. We don't want to get into a situation where you are having to offer higher interest, higher debt servicing costs, just because the plan isn't credible and rating agencies aren't giving your debt strong ratings, essentially. So tough choices ahead. This is where that path to balance needs clarity. And this is where, again, when we look at all of the provincial finance departments, not all of them are giving us perfect clarity of where they're headed, but some are very good at telling us where, essentially giving us line items about where the expenditures are happening, what are the expectations in terms of their different revenue items, and what are the expectations in terms of the different expenditure items. It's very hard to know what's going on when all you have to work with are kind of the top line revenue, top line expenditure. You have to have a lot of faith that somebody can achieve those, and let me tell you that the track record for the province here has not really been very good at all since the oil prices collapsed in 2014. So I think clarity would help. Let me just, I know you folks all know this, but revenues by source. In some of the studies we've done, you'll see that the tax rates in Newfoundland, the tax burden in Newfoundland and Labrador is very high in comparison to other provinces, both on the personal income tax side and on the corporate income tax side. I would argue that, in particular, when we think about corporate income taxes, it's not even a comparison across provinces that we need to worry about. It really is a comparison across global jurisdictions, and from our perspective, a comparison with and competitiveness with the United States. Since 2018, the U.S. has cut its corporate tax rates significantly, and when we look at, we thought we were competitive, but when we look at effective tax rates paid in the U.S., that is, what are corporations sending to government as a share of their gross revenues, we see much lower rates. In fact, about a 10% rate, effective tax rate in the U.S. in comparison to a 30% rate in Canada. We are losing out on investment in this country. When we, no matter what measure you look at, when we look specifically at the goods side of the economy, be it oil and gas investment, be it manufacturing, be it other goods production, we are not comparing well at all with what's going on in the U.S. Now, we thought a number of reasons for that. Access to the U.S. market and the dissolution of NAFTA certainly created a lot of uncertainty. But I think greater than that is also this tax competitiveness piece that we need to worry about. So when we think about corporate income taxes, I don't think a cross-jurisdictional, across-province comparison is really appropriate right now. What we need to really consider is, we are not competitive on a North American scale, and we need to worry about that. The other piece of interest here is how much of the revenue source is related to the royalties. 33% of revenues come from royalties. That's great. That adds a lot of resources and revenues to the government pie. It's terrific, but it's something that you can't count on every year. You need to be aware that this is volatile and can be cut significantly from one year to the next. So on the expenditure items, it's hard to say that we can cut in other programs and not cut in healthcare, not cut in education, unfortunately. You can see that health, education, other program expenditures, social services, all of these take up a big piece of the total expenditure pie, and one that's not movable is the debt charges, which in this case, as a share of expenditures, are 12%. But remember that revenues are lower than expenditures. So as a share of revenues, we're actually at 13% on those components. So you have to look at your major items. You have to look at your major expenditures when you start thinking about how can we deliver more efficiently, how can we reduce the expenditures as they are in the plan. So just some comparators. Here we can compare across provinces. And I know that when we think about delivering on some of these things, delivering on education, delivering on healthcare, delivering on social programs, this is more difficult in a province where population density is is very weak in comparison to many other regions. Much easier to deliver efficiently when population density is high. But nonetheless, there are other parts of Canada where population density is low. You can look at the Atlantic provinces. You can think about Saskatchewan, Manitoba, and program spending in this province as per person is very high in comparison to other jurisdictions. Very high. Public administration employment per 1,000 residents. Again, here is another area where, and this is excluding healthcare, education, social services. This is just administrating the public departments, the government departments, and Newfoundland and Labrador also relatively high, certainly compared to the national average and many other provinces across the country. Healthcare spending per person. So this just looks at the total healthcare bill, and it compares it with other provinces. Newfoundland and Labrador very high, but of course we know that Newfoundland and Labrador has an older population than much of the rest of Canada, so you would say, and you would argue, yes, of course, we'll have to, it'll be more costly for our delivering on our healthcare programs. But if you look at standardized spending, if you adjust for the age of the population and do those same comparisons, you still see Newfoundland and Labrador very high on the scale. Not only in terms of total spending, but when we break it down, hospitals and other institutions, Newfoundland and Labrador very high on a standardized, in other words, adjusted for the age of the population here, the older population in this province. And we still see the numbers as you have here, Newfoundland and Labrador much higher than all other provinces, in fact. Same thing with spending on essentially other healthcare spending. Part of this is wages are quite high for healthcare workers in this province in comparison to others. But just program delivery also much more costly. On the education side, Newfoundland and Labrador doesn't fare as badly here, certainly. This is education K-12, kindergarten to grade 12 per enrolled student. And you can see Newfoundland and Labrador certainly ahead of many of the other Atlantic provinces and certainly ahead of the national average, I would argue nonetheless. University spending, here this number is really quite high in comparison to other regions. This is, university spending per 1,000 enrolled students. So I'm going to just finish off on that note with, again, just a reminder that, I do think that, when you look at the fundamentals for Newfoundland and Labrador in terms of the demographics, in terms of the labor market, you'd think the province would be faring much worse than it actually is, because again, I think the outlook for oil and the revenues is pretty solid. So despite this demographic situation, the growth prospects are fairly good, and again, the government revenue side will be growing 3.5% over the next 10 years. So that's a solid piece that I think the province can count on. Again, despite the fact that 2020 may not be a very good year for oil prices, given what's happening in terms of the global economy. Debt service costs. This is the we need to ensure that we don't see bond rating agencies downgrade government of Newfoundland's and Labrador's debt any further. And I think the way to avoid that is a credible path to balance, one that's achieved year in, year out, one that has more information about where the restraint will happen, and just give some credence and some sense that we can achieve this plan going forward, I think would go a long way to addressing this uncertainty about delivering on the path to balance. Spending cuts, I mean, they're in the plan already. The question is, where are we going to see these be it efficiencies made, delivering more effectively? And I think there's certainly a possibility of delivering more effectively, not replicating services in many parts of the province, and of course. When you have when you have the provincial population declining, certainly the issue for rural Newfoundland is even more drastic, and so it's just not possible to be delivering those kinds of services in areas where essentially demographic or the population is in decline significantly. It's just not feasible going forward. So the province is going to have to think very hard about how to deliver its services more effectively. And then last, I think there is hope. We have seen fiscal situations turn around. We've done it nationally here. Back in the early 90s, there was a point in time where provincial federal debt had come close to 100% of GDP, and we had to turn that situation around, and we did so over the following years. I've talked about the Quebec example in the last 6 years. We just need to address the problem and slowly work our way to getting there. And again, when you turn that around, once your starting point is we're heading towards a surplus, it starts to take away from that burden and the issue around crowding out with debt servicing costs. So I'll finish on that, and I guess we're going to take some questions and have a little bit of discussion from you folks. Great.